Welcome to Polymarket Prof. On this channel, we use the wisdom of the crowds to analyze current affairs and seek opportunities to profit from potential mispricings. But here's a question every serious polymarket trader needs to ask. What exactly am I investing in? On the face of it, you're investing in contracts in future events. In other words, you're paying 25 cents for a contract that will expire for $1 if you correctly predict what's going to happen. But in fact, most of the time, if you want to behave like an investor rather than like a gambler, what you're really doing is investing on a contract in collective belief. And that's a distinction that matters a lot. Let's take an example. Suppose you buy shares in a market like Trump will be impeached before 2027. Now, if your plan is to hold that position all the way until the market resolves, then yes, in the most literal sense, you are investing in the outcome. You are staking your market on whether that event will actually happen. And if you are wrong, you lose everything you put into that position. That is one kind of trade. But suppose that's not your plan, and a lot of the time, I don't think that should be your plan. In that case, what you're investing in is not really the outcome itself, but rather the prospect that the crowd's belief will shift in your favor. You are investing in collective credence. That's the key idea. On prediction markets, prices do not just represent possible future outcomes, they also represent the market's current beliefs about those events. So if you plan to exit before resolution, what matters most is not simply whether the event actually happens. What matters is whether the market becomes more convinced that it will happen, and that's a very different thing. And once you see that, a lot of sensible trading strategy becomes clearer. Because if your main strategy is to sell before resolution, then your job is not to ask, will this happen? Your job is to ask, will the crowd become more confident that this will happen? Or on the other side, will the crowd become less confident that this will happen? That means you need some reason to think the collective belief will move. Maybe you think the market is currently underreacting to a trend. Maybe you think it is overreacting to a headline. Maybe a dramatic news cycle has temporarily pushed prices too high or too low, and that as that headline fades, the price will drift back towards a more reasonable estimate. In that sort of case, you are not trading the event so much as trading the market's interpretation of the event. And that is often much more realistic than simply trying to predict the final outcome months or even years in advance. This, I think, is one of the most important differences between investing and gambling on prediction markets. A gambler often focuses only on the final result. Did it happen or not? An investor in prediction market trading should also be asking, what is this contract likely to be worth next week, next month, or after the next major information update? Because unless you have a very good reason to hold it all the way until resolution, holding to resolution is often the more riskier move. And why is this? Well, because at resolution, there are only two possibilities, $1 or $0. And if it resolves against you, you lose the lot. That's not how sensible investors usually behave in other domains, is it? Stock investors don't normally say, I'll just hold this all the way down to $0 and see what happens. They reassess, they take profit, they cut losses, they respond to changing information. So, if we want to treat Polymarket as an investment experiment rather than a form of disguised gambling, we should think the same way here. So, before entering any position, ask yourself one very basic question. Am I investing in the outcome or in the future movement of collective belief? If you are investing in the outcome, you had better have a very good reason for thinking the event is genuinely going to occur. But if you are investing in collective belief, then you need a different kind of thesis. You need a reason to think the market's estimate will change in your favor before resolution. That might be because more evidence is coming. It might be because the market is temporarily distorted. Or it might be because public attention is latching onto the wrong thing and you expect that distortion to correct. Whatever the case, be clear. Because if you do not know what you're investing in, you are not really investing at all. You are just clicking buttons and hoping. And that is exactly what we are trying to avoid on this channel. So the big lesson for today is simple. On Polymarket, you are not always investing in outcomes. Very often, you are investing in beliefs about outcomes, and specifically in how those beliefs are likely to change over time. So get clear on that distinction. and you immediately start thinking more like an investor and less like a gambler. If you enjoyed this, subscribe to Polymarket Prof. On this channel, we are running a real experiment. Can prediction markets be approached as legitimate speculative investments, or is it just essentially gambling in fancy dress? Let's find out. If you have any sensible investment opportunities on Polymarket, let me know, put it in the comments below, and outline your reasoning. I'll see you on the next one.